last data point on earnings. Um, um, Consumer discretionary and staples, I would say the discretionary earnings would be a little bit higher, 45% for this year, and then back to the normal level, 20 or 10% for the next 2 years. The most stable or interesting part would be the communication service, EPS growth, and then financial, I think is less relevant because, it's mostly in the banks, it's one time, if you like. The lower, earnings growth area would be materials, and real estate and etc. The key reason for me to bring up this chart is to demonstrate the wide earnings growth dispersion. If I have a choice to invest in the China sectors and economy, I would always go for the higher growth sector or companies, and I don't mind pay a little bit premium. I don't want to be in a value trap because domestic liquidity and global liquidities is in historical peak, and everyone is trying to look for quality growth, and they always want to hedge inflation. So I think the high earnings growth area would be the place to be. That's why in one of my investment themes, consumer discretionary, if you find the right sector, right company, it would be the one of the attractive places to be. But real estate, energy, or maybe information technology might not be a good place to be. So for Morgan Stanley, the sell side, the consensus MSCI China, again, it ranged from 9% to 14% for this year, next year in the same range. But I think they underestimate. So we'll let the numbers speak for itself.